What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol MRVL for Marvell Tech. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, we covered this one just the other day, so this will be an update, as they were releasing earnings in the after hours. Obviously, that led to a nice gap up, and right now, we are holding a majority of that gap. Remember that 79.05, we've adjusted this, is the half gap from here to here. It's the 50% mark, and obviously, we are holding above that. So that is a slight bullish indication from the daily perspective. However, if we take a look at the 30-minute intraday perspective over here on the right, a little bit of a different story, right? We'll come in with our Fibonacci's from the high of the day down to the low of the day. There we go. And what you'll notice is, since this was all one fell swoop to the downside, the bounce from the lows back higher only took us to the 50% mark. Now, this would be a completely different story if we worked our way back above the 61.8 and actually closed above the 61.8, but we simply did not do that. If that were the case, we would get more of a daily hammer candle. That would be more bullish. Instead, it's kind of neutral. So again, a more bullish indication from the daily, a little bit more bearish from the 30-minute. However, I think you can look at this very simply as either we take out these highs here around 84.80, the open's no longer really important, nor that's the pre-market high, by the way, there. So if we take this out, it's a rotation likely up to the top end of today, our Friday's range at 88.50, right? So a breakout here leads to something like this. If we start consolidating down here, though, what does that start to become, right? If we do this, although it's not, perfect, and like the pure 38.2, which would be under here, it does start to become bear flag consolidation. And knowing that we have a big gap underneath us, the risk essentially is a breakdown of the low of day at 80.45 starts to take us into these lower targets. Now, 79.05 or 79 even is just, one of those psychological numbers. It's coming from the midpoint of the true gap range right here. I'm not saying it has to support there, but it may be a bump in the road. The next major area to pay attention to would be right here, the prior highs at around $75.26. So to boil it down in its most simplest form, breakouts up and over 84.40, and then being patient if we remain in range, potential for a breakdown and more of a gap fill underneath, $80.50. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.